Neil, thank you for joining us today. How are you?
Good. How are you?
I'm doing fantastic. I
Yeah.
know you're calling from the Midwest, Indianapolis, correct?
Yep. Indianapolis, Indiana. I grew up here. It's a great place to invest in real estate.
So I've heard. So I've heard. I've been trying to get into Columbus myself.
Okay.
To get us started, though, why don't you tell us, a little bit about yourself, who you are, where you're from, and how you got started in real estate in the first place?
Sure. Yeah. My name's Neil Goradia. Like I mentioned, I grew up here in Indianapolis, and by training, I'm a mechanical engineer. I've always liked how things worked, try to figure out how they work, and went to Purdue to get my engineering degree, and then worked for Rolls Royce for 10 years designing airplane engines. So it was completely different than real estate, but that's how I got my start in my career. And a couple years into that experience, I read a book like most people had, Rich Dad Poor Dad, and it really got me thinking about the idea of passive income, and that was just a big, mind blowing thought that you can make money when you sleep. And I didn't want to let that idea go. I wanted to see where that could take me. So I started talking to friends about that, and before you know it, I had two or three people that had read the book as well, and they were my good friends growing up. And we just started buying houses. This was all during working a 9 to 5 job, and it just progressed from there. We started buying, renovating, refinancing the Burr method. We started flipping. We bought delinquent notes where the person hadn't really been making their payments on time, and we took those assets over from them. Um, it kind of went from there. So that's kind of how I got started, and eventually I got to the point where I could leave my job. And in fact, what I'm doing now is more on the wholesaling side, as well as developing land into actual neighborhoods. So our first neighborhood that we developed was 20 acres and 41 lots that we were able to subdivide. And we're doing another one that's 33 lots this year, and it's just going to continue from there. So it's been a great experience.
Wow, there's a lot to pull from that. You
Yeah.
span pretty much every niche of of real estate investing. In that, when did you get started? What was the first year that you bought that first house?
So I was 25. This was 2007.
2000. Oh wow, so right
Yeah,
at the bottom of the barrel there.
it kind of was. I bought my first two deals when it wasn't quite at the bottom, and so that probably was the reason why I didn't do very well on those deals. But I have to say, having a business partner that pushes you allows you to get through those low spots where you think you just want to give up, and it really helped me continue going. I mean, there's many times where I just wanted to stop, but looking back, I'm so glad that I didn't.
Yeah, I can actually attest to that. Having a business partner, for anybody listening, watching, if you don't have a business partner that you're working with, it is so important, at least for your motivation. Neil, you can probably speak to this too. Having a business partner, not even on individual deals, but to like work together and push each other. It really helps you keep going when the inevitable downturn comes.
That's right. Yeah, and one thing you'll learn is, there's when you have a business partner that complements your skills, it's really great because you can focus on what you're really good at, and you can have them focus on what they're really good at. And it's whereas if you have the wrong partner, you guys are both trying to butt heads on every decision, and so it's really important to do your due diligence up front and make sure that you guys are a right fit for each other.
That is also very, very good advice. So it sounds like it's funny. You are, I think, the third engineer and at least the 10th person that said they got started with Rich Dad Poor Dad. So this is
That's
a
yeah,
common theme that's been coming through the show. It's really good.
yeah.
Um, so you got started buying houses. You did just regular, rentals, and then fix and flips, and then you got into the Burr method. Then you got into notes, and
Mhm.
now you're doing development.
Yep.
So kind of tell us why did you decide to? I mean, that's a broad breadth of different strategies,
Mhm.
and they all kind of entail different things. So why did you decide to go into land development?
Yeah, so land development has always been just something that I thought was really cool. I mean, everybody that I talk to about it just gets super excited about it. Like, how'd you get into that? And that's how I felt before I had gotten into it. I wanted to get into it. I wanted to learn how to build neighborhoods, how to build something that's going to be there after I die. And so the funny thing came about is that my old roommate from Purdue called me one day. This was 20 years after we graduated, and he said, "Listen, I'm relocating to Indianapolis from Chicago, and I haven't been able to find a property to buy that fits my needs, but I did find this piece of land. You have a real estate background, and I have experience in developing high-rise buildings and other type of developments in Chicago. Maybe we can combine our skills and try to make this into a neighborhood, and I can build my home in this neighborhood." So it probably wouldn't have come about if I wasn't listening for that nugget. Once you start thinking about things more, your ears start picking up things. And he just happened to mention something about development, and my ear perked up, and we had that conversation. So it took us about 5 years to really complete that development, but it was a lot of lessons learned, a lot of cutting our teeth on some things that we just had no idea how to do. And luckily we were profitable. We didn't probably make as much money as we could have, because things go wrong when you're doing it for the first time. But it was really exciting, and it was something new. And I think that's why you'll see that I've done so many different things. It's not because I necessarily wanted to do 10 things in real estate. It's just that I love the challenge of learning something new. So after a couple of years, when I get into a routine, I don't necessarily feel like I want to keep staying in that routine. I want to go on to something new and learn something new. And that's how I probably ended up in development.
I like it. I like it, and I'm sure it itches or scratches that engineer itch to solve all the problems that go along with developing
It
land.
does. Yeah, it does.
Um, so why don't you take us a little bit further into developing land? This isn't something that a lot of real estate investors do, especially when they're getting started. I mean, it's definitely something that a more experienced investor
Mhm.
engages in. So kind of tell us first, how do you decide on, you're starting from scratch, you're starting from raw land. So how do you
Mhm.
decide on the parcel, on the land, and what are you looking for? What demographics are you looking for? What aspects of the actual land itself are you looking for? And then kind of tell us, what's the process from there? You got to get permits, you got to find a builder. Just take us through the entire process, nuts to bolts. How does land development go?
Sure. Yeah. And there's so many variables involved. No two deals are going to be the same. So that's kind of also why it's tricky.
Mm.
But yeah, starting from the beginning, when you're locating a piece of land, it's important to know what type of utilities are available. It's not necessarily true that you're always going to have a water connection or a sewer connection right across the street. I mean, you might have to go 2 miles down the road, drill under the road to get to your parcel, and that's a huge cost. So you need to understand that part of it. You also need to understand what type of plan the city itself has for that parcel. And this is something that a lot of people don't know, is that most municipalities actually have land plans for the entire city. They have a vision for their city for the next 20 years. And they've actually blocked out every part of their city as to what they would like it to be. So there's parts that they want to be residential. There's other parts that they want to be commercial. There's other parts that they want to be industrial. And so really understanding what their land plan is and what their vision is for the future gives you a step up when you get to the point of proposing your project to the city, because you can tell them that you've already looked at their vision and you're in line with what they want. Um, so those are a few things you need to look at. Obviously, school systems are important if you're building residential homes and you want people to be able to build a home that they want to stay in for a long time. Um, Access to infrastructure such as interstates and things like that. So pretty much there's a lot of similarities with single residential flipping that you would do to make it desirable for someone that wants to buy. But you just have some added things infrastructure wise on the land development that you have to pay attention to. And then structure-wise, once you buy the land, you you have to take it through rezoning. Typically, it's usually not zoned to what it needs to be on the back end, and
So
that process.
there's both zoning and what you said before was just city planning, and that has nothing to do with zoning. It's just their vision for what that plat should be.
It does have to do with zoning. It's kind of it goes hand in hand. So basically, if their thought is that this area needs to be residential, then there's zones that will comply with that process. So, for example, a single family residential neighborhood, there's R1, R2, R3. Those are the main densities. Each number represents the amount of density and the amount of units you can have per acreage. And if you're going to have it more dense, you go towards one zoning. If you want it to be more spread out and not as many units, then you'll go towards another zoning. Um, and so that's kind of the iterative process you have to go through with the city. Is you have to sit down with them and say, this is what I'm planning. Does this work for you? If not, how do you want to tweak it? And it's a very political process, which I never really understood to begin with. You're dealing with presenting your project to city council members that have been elected to that office.
Oh, okay.
And it's a situation where you want to make sure you appease all their requirements. And even if you go in doing exactly what they told you to do, there might be 2 or 3 people on the city council that disagree with what you're doing, and they're going to vote no regardless. So
Does
it's
it have to be?
very.
I'm assuming it doesn't have to be unanimous vote in that case, or else no
It
developer
doesn't.
would ever
It
do
doesn't.
that.
You need a
Okay.
majority, but it's nerve wracking because not everybody shows up all the time. So initially, you thought you only needed the majority of 9 people, and it might be like a 5 and 4 count that you have to go for. But then if only 4 people show up, now the ratios are slightly different. So
Huh.
you just never know what you're going to get.
I've never thought of that aspect of. I've never done development myself, so that's really interesting. You actually have to. I never considered that you'd have to deal or local politics in that sense.
Yeah, yeah, exactly.
Hmm.
But in most cases, we try to do what's right for the surrounding neighbors. And a lot of times what that is improving drainage. You end up buying land in areas where water pools next to people's houses that are next to you. And um, it's really great to be able to present to your project and show that you're improving the neighborhood around you. That helps you with support, and it helps you get approved in the city council. And we're proud of being able to do that for our neighbors.
Huh. Interesting. Okay. So once you do get the zoning, so say you got your R3, what you were looking for, and now what's the next step after that?
So after that, during the same process, I would say you also have to look at your soil, make sure that there's no environmental contaminants in the soil. You have to make sure that if you're building a home that's going to have a basement, then that the soil composition is suitable for digging basements. So you want to make sure you do all your due diligence. And once all that is complete, and you can pretty much apply for permits with the city and bring those utilities to the site if you need to: water, sewer, sanitary. Water, storm sewer, and sanitary. And once you have those utilities there and the infrastructure is built, you'll pave roads. You want to get those roads paved, and you're basically creating a secondary plat, which is what the document is that gets recorded, that shows you've split up the property into however many parcels. That's what gives each of those individual parcels its own parcel number. And at that point, you just have to team up with a builder that's going to build the actual homes. There are some developers that build homes as well, like themselves, and so then they can start building their product. In our case, we don't specialize in building the actual structures. We just specialize in building the infrastructure. So on our first neighborhood, we found a home builder that's looking for that particular parcel, and we partnered up with them, and they signed a takedown agreement, which guarantees to us that they're going to buy a certain number of lots per month. And after so many years, you'll sell all your lots and you'll be done.
Got you. Okay. I'd always wondered that. So you do the land itself. You prepare the land, and then that's where you stop. Then you'll sell the plots, the prepared plots or
Yes.
plats to the developers.
Right. And the investment is all on the front end. So the land purchase, the construction, the rezoning, paying the attorneys to do all the rezoning, all of that work costs money, and you have to pay that up front. Then as you sell lots, those construction loans get paid back. And then the rule of thumb is basically that you'll need to try and aim for 75% of the lot sales to pay for the infrastructure. And then after that, the remaining 25% on the back end is where you make your profit. So it's a little bit riskier because you're taking all that chance up front. But if you do all your due diligence the right way, you'll be making pretty good money on the back end.
I was gonna say that sounds it sounds a little too scary for my taste. You got bigger balls than I do. All right.
It's scary for sure. I mean, but that's kind of what I thrive on, right? Is that challenge.
Mhm.
So hopefully you build up enough buffer in there to where even if things go wrong, you're not in the red at least.
Yeah, yeah, for sure. Because the last development you did about what was the size in terms of upfront capital that you had to do for that?
Yeah. So our first one cost about 2.5 million to purchase the land and do the development on. And hopefully when you sell those lots on the back end, you can sell them for between 90 and 120K a lot, just depending on the type of product that's going to go on there, or whatever a builder is willing to pay, really, because it's a negotiation at the end of the day.
Okay, that's interesting. So I want to take it a little bit past just land development. So
Sure.
you've gone. I mean, you've done single family, have you done multifamily? Have you like flipped multifamily houses and?
We have not flipped them. I mean, I've owned them as a landlord, but yeah, I have not flipped them.
Do you still own rentals, or are you 100% in for?
No, I do. I do. I still own about 12, and I'm still looking to acquire more because, as as Rich Dad Poor Dad teaches us, is that that the passive income is what allows me to do this full time. It allows me to. I also mentioned earlier that we moved to Asia I moved our whole family to Asia for almost a year, and I didn't have a job there, so it's the passive income that allowed us to do that. So yeah,
Wow,
I'm a big believer in
that's
rental.
that's great. That's exactly what Rich Dad Poor Dad says. So
Right.
congratulations.
Thank you. Yeah.
Um, so actually, I'm curious, what of all the different strategies that you've done, land development, single family, burn method, et cetera, which one has been, I was going to say your favorite, but also I suppose the most effective in getting you to where you want to be financially?
Yeah, that's a really good question. I would say a lot of people get started in wholesaling first, then maybe flipping, and then maybe rentals, just
Hmm.
because the barrier to entry is lower and it's better to make money faster in that order. I did it the exact opposite. I it's so strange. I started buying rentals, then after the rentals, I started flipping, and then after flipping, I got into wholesaling. And I think um, there's no good explanation for that other than in my mind, after having read everything, I knew that passive income was the ultimate goal. That's how I knew that you become wealthy. It's not from just making the money up front quickly and then doing it over and over again, because again, that's going to feel like a job, to
Yep.
keep doing those things over and over again. And so, I mean, we didn't have the capital we needed right away to buy the rentals, but we borrowed and begged and took out credit cards, and
Did
we
what
did
you had to
everything
do.
we needed to do. Um, we worked 8 hours a day at our normal jobs, and then worked 8 hours after that in the same day renovating our properties.
Wow.
Um, so it was a long, for 2 to 3 years. So I would say there's no best way of doing it. If you're interested in wholesaling, if you want to make quick money with little investment, that's perfectly fine. if you'd rather get your hands dirty and flip yourself, that's fine as well. Or, if you want to go straight to the rentals, that works also. You just got to think about what opportunities are coming your way. Be open to doing all three of them, just depending on what comes your way.
I like it. So we're going to switch gears just a little bit here. We've talked about, the nuts and bolts of your business, how you do land development, the actual process of getting, buying the land, platting it out. So now I want to hear a little bit more on the personal side, a little bit more of the stories. I mean, we all know real estate is, it's a roller coaster. You got your ups, you got your downs. So kind of take us, what has been kind of the most, not the lowest point, but also the most difficult thing that you've run into in real estate, and what lesson did you pull from that?
Yeah, I like that question. It's challenged me personally in more ways than I ever would have imagined, and it continues to do that even today. I mean, even after having done everything I've done, I get challenged on a personal level every single day. And a lot of it comes down to things that you're just not quite comfortable with. Like for me personally, I'm an introvert, and I can pretend like I'm an extrovert for a certain period of time, but at that point, I have to go back to being an introvert. And that was a big personal thing that I have developed, and I'm still trying to develop, because real estate is a people business. You have to be able to speak with people, negotiate with people, and network with people, right? I mean, your network is your net worth, is what they say, and I wholeheartedly believe that. So, as far as the toughest thing I've had to encounter, it's the people part of the business. It's um, initially when I was getting involved in real estate, like I mentioned to you, I had business partners, and we all had different strengths and weaknesses. And I'd be lying to you if I said all of my partnerships were perfect partnerships. I mean, there were many things that we butted heads on, and there were shouting matches, and it was all in good, for good intentions of trying to grow together and build our business together. But it was very, very challenging. And I'll say after all of that, you really learn what you're good at. And there's a really good book called Traction, which I'm sure you've heard of, that really goes through whether you're a visionary or whether you are more of an integrator type personality. And understanding which one you are will allow you to focus more of your time on doing what you love to do.
I like it. What was the name of that book again?
It's called Traction. I actually, no, I don't have it here with me, but there's Traction and there's Rocket Fuel. And those are the two really good books that talk about visionaries and integrators.
I like it. And I'm going to have to apologize. I mean, this is Corona time, so I'm at my home office, and my beagle must be seeing a dog out front, so she might be barking a little bit. So sorry if you hear a little.
No worries. I'm waiting. I'm just waiting for my kids to barge into the door.
Yeah, you deal with what you got to do with, right? Okay, so yeah, that's really good. I mean, we all know that real estate really is a people business. I mean, you really do have to get out there. And so one of the things that the lessons that you kind of had to overcome was dealing with, being a little bit more of an introvert and running into the reality that real estate is a people business. So, so that's a good lesson. And so now take us to the top. What has been the thing that you love the most about real estate? What's the thing that gets you out of the bed when you're thinking about it?
It's I think the flexibility is just amazing. I mean, this pandemic is a very good example, right? I mean, a lot of people out there that have worked their whole lives at their jobs and have really dedicated their lives to these employers are now just laying people off left and right. And I'm very fortunate to have been able to get into real estate when I did, and to build up a rental portfolio and to be able to work for myself. And I'm not dealing with the same types of things that some of these lifelong employees are dealing with struggling to make payments on their mortgage after they lose their job. It's not something that that we should take lightly. I think everybody has to really invest in themselves, is really the way to put it, because nobody else is going to invest in you like you're going to be able to invest in yourself. So I think the flexibility is huge. Being able to wake up, help make breakfast for my kids, take my kids to school, go to all their activities after school, and really just dictate the life that I want to live, understanding what my whys are in my life and making sure I fit those into my day, instead of putting an employer first. So I think that in itself is worth it.
I like it. Couldn't put it any better way. Unfortunately, we're running at the end of our scheduled time here. We like to keep these about 20 to 30 minutes. But before we go, everybody needs things. So what is it that somebody could bring you that you could benefit from?
Like I said, I always love learning about new areas of real estate. So I would love to just continue to network with people and really understand different aspects of real estate that I haven't gotten into yet. I haven't done the multifamilies, like you said, on the flipping multifamilies. I love the idea of apartment complexes being able to force appreciation and, maybe selling 5 years down the road. But really, I just love networking. So if anybody is interested in just learning more about what I've done, or maybe they can share something that they've done that I haven't done, that really gets me excited. And I love helping people take control of their time again and be able to fill their days with things that they want to do.
Awesome. I love it. All right, Neil. Well, I know I can speak for everybody, both listening and watching, that we really appreciated having you on here, sharing your wisdom about land development and just your entire experience in real estate. If somebody did want to get a hold of you, get in contact with you, what would be the best way for them to do that?
Yeah, so I'm on all the social media platforms, Facebook, LinkedIn. So yeah, just you can reach out, Neil Goradia, Goradia. It's kind of a tough last name to spell, but yeah, just feel free to get in touch with me, and I'm pretty accessible. I think like one of your other guests said, just please try not to sell me on something, but but more than happy to talk and learn from each other.
Sounds good. Again, thank you very, very much for coming on, and for everybody else, we will see you on the next episode.
All right. Thank you very much for having me.
Thank you for joining us on the Real Estate Investing Club. If you've watched this far, I'm sure you've gotten a little bit of value out of this. So we would appreciate it if you hit that thumbs up, share it with your friends or family, whatever it may be. And if you'd like to share or partner with us on a deal, we absolutely love partnering on deals and are always looking for quality projects. Go to www.therealestateinvestingclub.com to get in contact with one of our partners. Otherwise, I hope you guys have an absolutely fantastic day, and I look forward to seeing you on the next episode.